Hello, everybody, and welcome back. Today, we're diving into the latest real estate market stats and trends for the Reno Sparks area. If you're wondering where the market is headed, we've got some eye-opening updates for you. The number of homes for sale is on the rise, home sales are cooling down a bit, and mortgage rates are starting to dip. It's a good thing. If you're thinking about selling, buying, or maybe you're just curious, you need to stick around because we're breaking down what all of this means for you. Let's go.
Assist you sell way smarter.
So the first chart we like to look at is interest rates. Before we dive into that, a couple of items to mention. Number one, this is for the Reno Sparks metro area only. This is for single family residential properties only. Basically homes, townhomes, and condos. Does not include mobile homes, lots, land, multifamily, etc. This is for October 2024, so we'll have stats through the end of September 2024. And as you can see on the screen here, on these charts, we'll normally have dates along the bottom of the screen here. In this case, back about a decade, back to 2014 on the left will be another data set. At the top will be the key data point we're going to talk about in the yellow box there, and on the right will be the previous year, in this case September of 2023, and of course you'll see the percentage comparison, either positive or negative in the middle there. So interest rates we like to look at first. Why? Because they have the biggest impact on the overall market, because most people get a mortgage to buy a home. Therefore, if interest rates go up, homes become less affordable, payments become more, etc. And the opposite is true when interest rates fall. Right now we're sitting at 6.2%, which is down a full percentage point from last year, where we're sitting at 7.2%. So a 14.2% drop. So that's a very good thing. We're starting to see some relief in interest rates. And again, why does that matter? Because payments. Right now, the estimated payment here in the Reno Sparks area is $3,887, which is down 4.5% from $4,071 back in September of 2023. Now, the affordability index, simply put, this chart, you want this number to be as high as possible, because that means in terms of percentage, it means how much a median income earner can afford in terms of percentage of the median priced home. So 100% would mean they can afford a median price home. Over 100% which means they could afford more than a median price home. And of course, when it drops below, right now we're sitting a little over half the median home price is what somebody could afford with a median income, household income. So, but that's up 3 points from where we were last year. So we're heading in the right direction. We're trending back towards a more affordable marketplace, which is a good thing. Now, the number that seems to get the most headlines is our median price here in the Reno Sparks area. Now, this is Reno Sparks combined. You're going to see this a little higher in Reno, a little lower in Sparks, but we're sitting right at $550,000 as a median home price, which is up 4.8% compared to last year. We were sitting at $525,000. And as you can see, we're starting to form a little bit of resistance here in a little channel. We saw it peak, pull back, starting to see it rise again, starting to see it pull back again. So we're not seeing these straight line up moves anymore. We're definitely getting some resistance in terms of price. We'll see how the interest rates and the market in general reacts, but for now, I don't expect major price movements, at least for the short term. Let's take a look at new listings. So these are people that put their homes on the market in September of 2024. 615, which is up 17.1% from last year, where we had only 525. So that's a good thing. More people are choosing to put their homes on the market than last year. Let's look at new listings by price. So you can see along the bottom is the actual price range broken down into different brackets, 1 to 2, 2 to 3, 3 to 4, and so on. And then it'll be the quantity of new listings on the left over here. And as you can see, the bulk of the listings are really between 400 and a million right here. And a lot of them are that 600 to a million range right up in here. And let's look at active. The difference between new and active is the new ones are just new ones that came on in September. The active ones, these could have been on the market for a month, 2, 3, 4 months or beyond. This is just standing inventory. So if you're thinking about buying a home, these are the homes you go look at and buy. If you're thinking of selling, this would be your direct competition. 1,317, up 20.4% from last year. That's a good thing. We only had 1,094. And as you can see, we're starting to see a more normalized inventory. Clearly a huge drop down here during the pandemic, and then of course a little bit last year. But again, we're starting to see a bit of a recovery. Now, this is where things start to get interesting. When you break down active by price, you can see it's relatively stable across all price ranges, right? You're seeing 4 to 5, around 200, 225 at 5 to 6, 175 at 6 to 7, and so on. So the actives are spread out across all price ranges, which is a good thing. Now let's talk about closed sales. Now these are homes that actually sold. 493, which is up 6.7% from last year. We had 462. So definitely up, but not a whole lot. Now let's look at closed by price, and this is where it gets really interesting. Remember I showed you before active by price. See all these listings. Now if we go closed by price, you'll notice this upper end price range, we're not seeing a lot of closings. The majority of closings are taking place in the 4 to about 6 range, even up to about 650, 700. Once you start getting above that, home sales start to fall significantly. Now let's take a look at month supply of inventory. This is another one of those macro indicators I like to take a look at because it lets us know how many homes are on the market relative to our sales pace. So for example, if we had 1,500 homes on the market and the average sales month was about 500, you would have 3 months of inventory. We like to see around 3, 4, 5 months inventory in that range. That gives us a pretty stable market where there's a good number of homes to choose from. There's not a ton of competition for sellers, and the market tends to be strong and moving well. So we're getting right around that point at 2.7, which is up nearly 13% from last year. We only had 2.4 months. But if you look back and going back a full decade, you can see we've averaged right around this 2.5 to 3 month inventory. Saw a drop in 18, saw a bit of more of a rise. Of course, a major drop during the pandemic where we had less than a month, but we're starting to see some recovery there. But here's again where the chart gets super interesting is if you break it down by price. Those 2.7 months are greatly reduced in the 4 to 500 range and the 5 to 6, 6 to 7 range. So this area here, we're starting to see inventory climb a bit, but it's still significantly lower than we'd like to see. But look at the inventory in these upper end price ranges. If you're $1 million plus, you're already at roughly 4 months. You're pushing 7 months at $1.5 million plus. And of course, the lower end stuff, we're seeing the same thing. Now, one chart I wanted to bring to your attention just because I thought it was very significant was days on market. Now, this is the number of days from a property being listed saying, yep, I want to sell it, to the time they get an accepted contract, meaning it's essentially an escrow and going to be closing. What I found interesting is this is up 64.7, almost 65% from last year. So 28 days up from 17, which is not significant. We're not talking a super slow market, but it is definitely taking a lot longer. So the reason I wanted to bring this up is if you're selling your home, prepare that it might take a little bit longer. I know people get frustrated. They heard all the stories from 6 months or a year ago or 2 years ago where homes went on the market and they were gone within a couple of days and they got them multiple offers. That's just not happening anymore for the most part. Things are taking a little bit longer to sell. The market is starting to stabilize quite a bit. Thinking of selling your home or buying, there's no reason not to contact Assist to Sell. We'll sell your home for only $49.95. Homes over $500,000, only 1%. So significant less than you might expect to pay from anywhere else in town, and that is for a full service experience. You get everything. We take care of everything top to bottom. Our expert agents will help you price your home, handle all the paperwork, do tons of marketing when you get an offer, we'll negotiate on your behalf, run the escrow, do absolutely everything start to finish. And the good news is you get a whole lot more money because you're paying less in real estate commission. So visit our website for renohomes.com, check out more, and if you want more specifics on a house, maybe you're thinking of selling or buying, you can use our automated value engine right here front and center. Click out Find Out Now, type in the address, and we'll create a really accurate computer generated report, but then we'll also follow that up with a full report for you so you know what the home may sell for, or if you're getting a good deal if you're thinking about buying. In any event, we wish you nothing but the best. Thanks for tuning in, and we'll see you next time right here on the Reno Sparks Real Estate Market Update Show. Have a great October, everybody. Bye-bye.
Assist to sell way smarter.